I'm Nate White, and this is Dave Young, and we're with Paragon Wealth Management, and today we're talking about ETF or exchange-traded funds. Dave, exchange-traded funds have been very popular the last few years. A lot of investors are using them. What do you like about exchange-traded funds? What do you like to use them here at Paragon?
Well, exchange-traded funds are really just next-generation mutual funds. You know, early on, I mean, for the last, 30, 40 years, mutual funds have been the main vehicle of choice. And then within just the last 6 or 8 years, ETFs have gotten a lot more popular. There's a number of reasons for that. ETFs are a lot more transparent. You know exactly what you're investing in. With a mutual fund, you don't really know because they report 3, 6, 9 months after the fact what the funds are holding.
Right.
So you can know what you've got right then. ETFs are more tax efficient than mutual funds. Mutual funds have a lot of distribution tax issues that people don't like, and ETFs eliminate those. ETFs can be traded end of day or during the day, whereas mutual funds are traded end of day only.
Right.
And right now you can get representation of almost any sector or category that you want, using the ETFs. When you use the ETFs, you can, for example, if you wanted to invest in steel stocks, in the past you would have to own an ETF that was commodity based, that held steel stocks and a bunch of other stuff. Whereas with an ETF you can dial right down and just own purely steel stocks. Right. So it gives you a lot more focus and flexibility.
And flexibility. So that flexibility, you can pretty much go anywhere, invest in whatever type of asset class that you feel is advantageous at the time.
Right, and that's on a global basis. So in the U.S., Brazil, China, India, all of the different countries in Europe, anywhere you want, you've got direct access to. One thing that I was going to ask you, because you trade these on an ongoing basis, what are some of the problems with ETFs?
I'd say what you're saying is, now that a lot of people are using ETFs now, ETFs are almost moving the market sometimes because they've become so popular that it's kind of increased the correlation of things in the market. So a lot of asset classes, everything moves up and then everything moves down together as people move into them. But as you said, it does give you a lot of flexibility in there. It's just you got to know which ones to use, the ones with the best liquidity, because there are more ETFs out there than you can even number now. Mm-hmm. And a lot of them are very illiquid. And here at Paragon, we just like to, of course, stick with the liquid ones that are out there, the sectors and areas in the markets that we know the best, and give us the best liquidity that we can make the call to get in and get out when we need to.
What's the problem with lack of liquidity?
Lack of liquidity is going to increase your cost of trading because the spread between what you're buying and selling is increased. And then if you need to get out of that position and you've bought it, at a certain price, and then you go to get out and maybe the markets are moving heavy, you can really take a hit, kind of a liquidity trap trying to get out. Yeah. And you could get in, but then once you want to get out, it might be kind of hard to get out. So
I think overall ETFs are a really good way to invest. You just have to be careful, right, that you don't just blindly invest in any ETF, because like you say, you may find yourself trapped in one that you can't get out of in a cost-effective way. Right.
And it's kind of just like with any investment. There's the pros and cons, but if you know what you're doing with them, I think they can give you a good advantage in the market.
Right.